As in World War I, the warring parties in the Second World War abandoned the gold standard to finance the war with central bank-generated inflation. After the war, there was an attempt to use the prestige of the gold standard to establish a global inflationary system. The world's financial leaders met at Bretton Woods in New Hampshire under the direction of the famous economist John Maynard Keynes. Their idea was to set up a new international monetary system that would have both gold and inflation.
Under this system, the U.S. dollar would be redeemable in gold, but only for foreign official institutions, central banks and foreign governments, at the rate of $35 per ounce. All other currencies would have fixed exchange rates with the U.S. dollar, and they would be redeemable in U.S. dollars.
The New York Times editorialist Henry Hazlitt was one of the first to realize that this semi-gold standard would not succeed.
Even from the very beginning, it was doomed to failure, and this very outstanding journalist at that time, Henry Hazlitt, predicted it wouldn't work, because he says the temptation will always be that the government will print more money because they will accept these dollars and they won't demand the gold and won't hold the government in check. And he was absolutely right.
During the 1960s, the U.S. government was trying to meet the cost of massive social welfare programs at home and the Vietnam War abroad. By printing more money, President Lyndon Johnson believed, the U.S. government could accomplish its goals without raising taxes, which may have caused a taxpayer revolt. In other words, it could have both guns and butter.
We will make sure that every dollar is spent with the thrift and with the common sense which recognizes how hard the taxpayer worked in order to earn it.
But the more money the U.S. printed, the more it eroded the value of the dollar. Nervous foreigners began redeeming their dollars in gold, as they were entitled to do under the Bretton Woods Agreement. After paying out billions in gold, the U.S. was left with $36 billion worth of outstanding debt to foreign creditors and gold reserves worth just $18 billion. Rather than stop the inflation, in 1971, President Richard Nixon refused to redeem any more dollars.
I directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
It was the death knell for the Bretton Woods semi-gold standard, and a triumph for the Federal Reserve. The dollar would no longer have even the illusion of a fixed value against other currencies. It would float against them, causing even more dislocation in foreign trade and massive uncertainties for businessmen. Worse, the final check on dollar creation disappeared, creating endless possibilities for inflation. It's running at more than 300% since 1971, thanks to the Fed's power to create money out of thin air and to insured deposits. No U.S. federal budget has been balanced since it abandoned the gold standard.
I don't think that that's something that enhances the efficiency of our economy. I believe that the best money is a market-determined money, okay, such as the gold, such as we had under the gold standard. In order to get back to a market-determined money, the Fed has to be abolished.
There is not now, nor has there ever been, any direct control over the Fed by the President or Congress. The meetings of the Federal Reserve Board are held in secret, and nobody knows exactly what goes on. If you watch the business report every night, commentators are constantly speculating about what the Fed might do.
All eyes were on Washington today as the Federal Reserve met to decide the future direction of interest rates.
Most economists expect the Fed to leave monetary policy unchanged.
It has spawned a whole industry of Fed watchers who try to second-guess the Fed.
The Federal Reserve has been surrounded by secrecy ever since its planning, its installation, and its operations to the present day. And the reason is because they can't tell the truth. If they told the truth, there'd be a revolution and there'd be a bunch of Americans, they're ready to all toss them out of the building.
A recent attempt to open the Fed to public scrutiny came in 1993. The head of the House Banking Committee, Representative Henry Gonzalez of Texas, called for an independent audit of the Fed's operations. He wanted the proceedings of the Open Market Committee videotaped, with detailed minutes released within a week instead of vague summaries issued several weeks later. Gonzales also proposed that the president choose the 12 heads of the Fed's regional banks instead of powerful bankers. Predictably, Fed Chairman Alan Greenspan resisted the changes. What was surprising was President Bill Clinton's position. He declared the reforms would, quote, run the risk of undermining market confidence in the Fed. After the Mexican government inflated and devalued the peso in 1995, the Mexican economy went into a tailspin. Alan Greenspan lobbied Congress and the Clinton administration for a $52 billion bailout. As it turned out, the Fed's member banks held as much as $26 billion in Mexican debt. With no choice in the matter, American taxpayers and savers paid the bill.
The congressmen themselves, from my experience they're pretty naive and they don't understand it. The few that have to, like the chairman of the banking committee, is aware of this and goes along with it, and they continue to perpetuate this myth that the Federal Reserve brings about stability and they do good things for economic growth, even though they're the culprits. They're the ones who have caused all the problems. They're the ones who caused the recession, the unemployment, and the downsizing of business and all the ill effects that we have to witness. But their PR job is excellent because they have convinced most congressmen that they are very necessary to maintain stability and economic growth and all these wonderful things that they claim credit for.
It is clear that the United States cannot rely on Alan Greenspan or any other Fed chairman to fight the chronic inflation that has wrecked our savings, distorted our economy, redistributed income and wealth, and brought us devastating booms and busts. Despite the established view, Greenspan, the Fed, and big commercial bankers are not the inflation fighters they pretend to be. The Fed and its allied banks are not part of the solution to inflation in the business cycle. They are the problem itself. To limit chronic inflation and boom-bust business cycles, the currency must be backed 100% by gold. That would remove the Fed's ability to print money, which amounts to no more than legalized counterfeiting. Instead, there would be a monetary system where gold serves to anchor the dollar, rather than the fiat reserves created by the Fed.
If we were to establish a real gold standard, the average American family would benefit tremendously. First of all, there'd be more jobs, better jobs, more secure jobs, more business opportunities, no more business cycle, no more recessions and depressions. People's savings would be secure. You wouldn't have to worry if you put away money for your old age that its value would be stolen by the central bank and by the central government as they are today.
Under a 100% gold standard, there would be no place for fractional reserve banking. For checking accounts and other demand deposits, the banks would keep reserves on hand to meet depositors' claims. Banks would receive a fee from their customers for keeping their gold. In loan banking, investors would hand over their money for a fixed period of time to earn interest. Once the gold standard is in place, individual bank depositors would always have access to their money, and investors would be kept informed of their balance sheet. And at a national level, a tight rein would be kept on government spending.
You have relatively price stability. You have a stable purchasing power for the money. You eliminate the business cycle. You have reasonable interest rates rather than gyrating interest rates, and you get rid of the political manipulation of interest rates and the political manipulation of the money supply. And this then preserves wealth and builds wealth and allows for economic growth.
It's as simple as this. Sound money means economic prosperity and limited government. Unsound money means inflation, recessions, and depressions, and big government. What sort of system do we want for our families? Don't we want prosperity and security that we can hand on to future generations? Transition to a gold standard will not be easy, but as Murray Rothbard put it, the alternative is much worse. Since 1980, the Fed has enjoyed the absolute power to do literally anything it wants. To buy not only U.S. government securities, but any asset whatever. to buy as many assets and to inflate credit as much as it pleases. There are no restraints on the Federal Reserve. The Fed is master of all it controls.